Okay, good afternoon, you amazing people, guys. It is the Daily Dose. If you guys notice, I'm wearing a robe. It's Thursday, it's raining, and I'm feeling a little bit like Hugh Hefner today, so just excuse me. Right, so guys, we've survived the Federal Reserve interest rate decision. We have one small bit of info that we have to get through this afternoon with regards to US data, and then it's pretty clear where markets are heading, right? Markets are giving us all the data that we need to really establish trend. And again, the trend is our friend. We're not going to overcomplicate diving into what are people going to do with this information. We're simply using price action to determine trend, and the trend is our friend, bottom line, right? There's a very useful saying that just says, keep it simple, stupid. And that's all we're doing today, right? We're not overcomplicating it. We're using price action to take advantage of the market. So let's quickly share with you what obviously has happened. If you missed last night and you weren't with us, you obviously missed out. There was a lot of information shared about Powell, his opinion. He was acting super strange, very, very dovish. I haven't seen him act that way in a very, very long time, but he was acting that way nevertheless. So that's obviously a bit of information we're going to need to comb through and assess over the coming days. However, the market's reaction is very, very clear, right? It signals strength on the dollar. It signaled weakness to Wall Street. And I've been getting this question quite a bit in direct messages in terms of, why would that be? Why would Powell's weakness signal strength on the dollar and weakness in Wall Street, right? Well, my belief is that Wall Street wanted to see some sort of decisive plan. I think the fact that Powell avoided the soft landing as a certain probability and rather just that it's a likelihood and they're aiming for it, I think obviously gave Wall Street a little bit of quivers. In addition to that, it's very, very clear that there's very likely going to be another interest rate hike in the next two meetings, right? At least before the end of the year. Now, what does that do? It signals that if another interest rate hike comes, that government-backed bonds, treasury yields are going to be far more attractive, right? And I believe that investors are parking and diversifying a bit more money into those areas and will then decide to tip and pivot money back into slightly riskier instruments such as US 100, S&P 500, Dow Jones, etc. So I think as a combination of the indecisiveness that I think Powell demonstrated, in my personal opinion, as well as the very clear evidence that there's likely to be one more hike, he's done two things. He's signaled the top of the curve. He signaled the top of the interest rate hike curve being just one more away between now and the end of the year. And the second thing, obviously, that indecisiveness makes Wall Street a little bit worrisome. Okay, so those are going to be the two things that I believe has driven or at least lent some strength to the dollar and ultimately caused a little bit of sell-off on commodities as well as Wall Street. Now, if you missed last night, I did share an article into Premium Plus. The honest opinion, it's a really fair article, something that we don't often see from news houses. They generally try and blow these things up and really sensationalize certain aspects of the speech, where this one is fairly straightforward and a fairly representative read on what actually happened last night. And just a shout out, if you're with us last night for those 2 hours, big ups to you. It's quite hard to sit through these things for 2 hours plus just listening to politicians, right? But it's super important for your trading journey. Now, with regards to what I said about, we've got a little bit of info we still need to just get through for this afternoon. This is going to be a very straightforward hit and run, right? And I just want everybody to understand this, is that we've got a little bit of data that is due for this afternoon. That's going to come out at 2:30 plus minus 26, 27 minutes from now. What we need to understand here is that depending on what we get from this data, this is either going to strengthen the dollar or weaken the dollar, right? Simply put, you guys know with fundamentals, it can come in 50-50, can have a bit of a mixed signal. But what we're looking for this afternoon at 2:30 is a sure win for the dollar or a sure loss for the dollar overwhelmingly. Now, at the moment, estimates from economists, and again, I don't know who these economists are. Most of the time, I believe these people are intoxicated because their numbers never really ever tie up. But at the moment, as it stands, economists are forecasting that there will be more jobless claims than previous, right? So a growth in the number of people filing for unemployment. Initial jobless claims also expected to grow by about 5,000. And those are going to be the two numbers that are going to be probably the most focused on for this afternoon. And then over and above that, it's going to be that fully fed manufacturing index, right? So at the moment, the index is expected to come in at negative 0.7, right? So pretty bad, all right? Now, if we look at all of these things, most of these things are pointing as a forecast to a weaker dollar. But as you guys know, with the dollar fundamentals and the way these things are projected, they forecast one thing and we receive something completely different. So here's two scenarios, right? I'll show you guys the charts in a second, but at the moment we're seeing a sell-off pretty much across the board on everything, US 100, S&P 500, Dow Jones, gold, silver, etc. right? And that's mostly due to the strength of the dollar. So if these numbers come in as analysts expect, this might give us a really good potential reversal point for some sort of retracement on the losses that have been made. So as an example, should we get out numbers here that are higher than expected, inverted commas, worse for the dollar, this may give us a turning point to start retracing and make some long positions, or at least retrace some of those losses from yesterday or the downside moves from yesterday. If you were in the live show yesterday, I pointed out some levels that I would set up some pending orders. I wasn't too keen on setting up too many pending orders on indices. However, gold was very clear. If you guys took that order on gold at the levels that I provided, you should be in a great amount of profit. 120 to 150 pips on gold per position as of this morning. I did mention some USD positions. If you took that too, you should as well be in profit. Now, I see this with a lot of students and a lot of clients from around the world. A lot of people listen to what I say, look at those levels and look at taking trades at those levels based on their risk, and they send me screenshots and say, hey, listen, we did this. And a lot don't, right? So when I mention levels, any show, go back and have a look at the levels I mention, and then go ahead and have a look at what the trade would be now. And most of the time, 9 times out of 10, when those levels are hit, it results in a profit, right? So a lot of people are waiting for me to, at 1 a.m., call out a buy or sell. I'm providing you with information. I'm providing you with a level that when that level's hit, you're in a position not only to take the trade, but understand why the trade is being taken. That is far more valuable than a signal. Of course, we still put a ton of effort into signals, and our new social trading community will tie all of that up absolutely perfectly. We're spending a lot of time on a lot of other aspects. Once the community is launched and you have access to it as Premium Plus, we will then focus fully on signals. So again, I'm not giving you guys too much trouble about it, but I'm just saying don't miss out on trades because you're waiting for it to be called out. If I've given you a position, go watch it, monitor, and decide for yourself, is that a trade that you do want to take? So if this data comes out higher than expected, it's going to be negative for the dollar, potential reversal points for us, and I'll show you where those are. But again, as we've seen with the dollar, almost time and time again, when it's expected to come out negative, we often see some sort of win here, right? In this particular case, we could be in a position where we end up seeing continuous jobless claims come in under expectation, be great for the dollar. Initial jobless claims under expectation. The Fed manufacturing index, it's forecast to be negative 0.7%. This could come in even at 1 or 2% positive. That'll be good for the dollar, right? In that situation where we have a good for the dollar situation, all that's going to do is continue to fuel the current move that markets are in, which is a big sell side direction. Okay, so let me share with you guys the charts really quickly in terms of what am I seeing, what am I doing, and we can take it from there. Now, I got this question in the leadership group today. When I'm speaking about something, people often ask, what time frame am I looking at? Now, often on the shows, we will deal with the bigger picture, we'll dive down, we'll break it down. But just as I've shown you when it comes to the quantum growth markets, right? When it comes down to the analysis, it's a very long piece of information, right? It's an hour and a half of doing one analysis on one pair. But what you'll understand is that you have to go from a bigger time frame to go to a smaller and work your way down to understand the bigger picture and to where it is now, right? Often when I'm looking at charts, I'm looking at multiple time frames at the same time. Now in the shows, because you're watching in 1080p, it's a set format, I can't show you my whole screen. I'm only showing you literally that much of my screen when the screen is 3 times that width, where I have all my charts. So just a word of caution there. When I speak about levels, I'm looking at the thing holistically, and I hope that answers some questions for some people. Now, yesterday we spoke about, and even last week we spoke about the fact that, US30 is going to make this bit of a push. I highlighted in the group that, this is a dangerous move in the sense that we've seen this be a liquidity grab area in the past, and that push was extended substantially higher than what I thought, but ultimately rejected and failed this level. So I just want us to understand that from a price action perspective, this rejection and failure already, prior to even getting the Federal Reserve interest rates, from a price action perspective, already dictated to us that US30 is in some trouble and potentially can and might even fall. Looking at the interest rate announcement from last night, we immediately started to see almost on the start of the interest rate announcement, market starts to sell off. Now in the past, I've always been very cautious of selling off as the markets or the interest rates announced, because again, Powell's speech could come across a different way. Markets could take that in a different direction. And we see a lot of sideways movement where yesterday, uncharacteristically, we saw an overwhelming amount of momentum towards the downside, both on US30 as well as USA 100, right? Now, on both of these, I did mention that I have a key target or zone in my eyes that I would be looking at that 343 number, right? 34330, 34340, whatever the case may be. Now, I obviously have quite a few different trading terminals running at the same time, different times, etc. And I want to talk about this towards the end, but ultimately, I mentioned yesterday, primarily looking at gold, that if we see that break in market structure, that level over there, if we see that level break, that's where I'm going to start to look for some sells. And that's why I entered in some sells already last night on gold. Right, so gold's already pushed down 140, 150 pips. And with reference to the levels that I mentioned last night, I also mentioned that should we get past a certain level, that 343.30, 343.40 mark, that's going to be my ultimate lowest level to consider a US 30 potential sell, as well as a US 100 potential sell. Now, I was hoping that this would only materialize after the US session, that we would see a continuation of volume, but we're in a little bit of a catch-22 this afternoon, in the sense that we've already seen these markets push past some of these key levels, and we have this data due. So this means two things. Either the data that we're going to get at 2:30 in the next, let's say 16, 17 minutes from now, is going to support a continuation here, or it's going to potentially be an area for pause, right? And again, as I mentioned, a stronger dollar would present a likelihood for pause and potential reversal. A stronger dollar, a stronger dollar will be a continuation, right? Numbers lower than expected would be a stronger dollar continuation. Numbers higher than expected would be bad for the dollar, and that could give us a moment of pause to reflect and have a look at what the New York Stock Exchange will do with that data. So it's a pretty clear-cut situation, a pretty clear-cut setup. We have a bunch of bear momentum in this market at the moment. The data should add fuel to the fire, or it should potentially add a bit of water, allowing for pause and a retracement, right? This is a fairly big move, uncharacteristically big for, half a trading day. And it wouldn't be surprising to expect some sort of correction off this level. Looking at US 30, we've already broken past a very, very key level. I was mentioning in the leadership groups that this would be a key support for me. However, I still believe there was quite a bit of downside momentum based off what has happened with Powell. And just looking at the markets, right? You don't have to have, a PhD in the world of finance or the world of charting or trading to know that there is a lot of momentum here towards this downside. So for this afternoon, I believe it's going to be clear cut. The data is either going to support a continuation of this move, or it may signal a potential reversal. Now, I'm going to deal with this in two ways. The first way would be that if it supports a continuation, right, I believe that will be good enough, right, looking at the amount of momentum downside to add positions to the downside. However, if we get a data release that supports a pause, right, or markets to potentially pause out at this level, meaning a weaker dollar, I would then look for the New York Stock Exchange to reveal direction, right? The New York Stock Exchange, the initial volume should tell us what Wall Street is thinking about this data and where they're piling in some of their trades. So that's kind of the way we're going to have to deal with it this afternoon. And I believe the data coming out in the next 15 minutes, right, will give us a bit of a cue, or at least a key to what that may end up being. And then obviously we need to wait for the New York Stock Exchange to confirm direction. But there's quite a few opportunities here. We've obviously spoken about gold, we've spoken about US 30, we've spoken about USA 100. That is very, very clear cut. The items that I'm still not 100% convinced on is going to still be Euro USD. The fact that we've clearly outside of structure now, we're at the 100% low of the previous low, right? We've made that double bottom, and any sort of continuation in dollar strength will represent big opportunities here to get in some long-term swing trades on Euro USD towards that downside. The same thing is true for USD CHF. USD CHF has basically popped through most of all the fib levels, retesting that previous high, and any sort of continuation on dollar strength here would then represent an opportunity for USD CHF as a long-term potential trade towards that top side. So those are unconfirmed yet, and the data should potentially give us some sort of indication there. And these may be swing trades that may evolve for us over the next month, 2 months. It's anybody's guess at this point. The only other thing I also want to add here is that if we have an interest rate announcement, right, so maybe just add this as a little bit of a add-on to the talk of the discussion, right? So we received Powell saying, okay, he's going to pause interest rates. We see that he may have not been, as stern or as convincing or as hawkish as we would like to expect. And markets have taken that as strength of the dollar, negative for Wall Street. If we get an interest rate announcement in the next 2-3 months or before the end of the year, that again will fuel some more dollar gains. Interest rate hikes equal a stronger dollar. So at this moment in time, I think it's very clear, to say the least, that I'm going to be long-term bullish, or at least when I say long-term, I mean over this next quarter, at least long-term bullish on the dollar based on a couple factors. A, the fact I just mentioned, that an interest rate announcement likely in the next meeting or two will fuel some more dollar gains. But also we have this floating external geopolitical factors, China, Russia, Ukraine, oil crisis, etc., all of which will fuel the dollar. So if we look at all the factors that we are yet unknown, most of them point towards a likelihood of a stronger dollar, primarily over this next quarter. So that was the importance of the Federal Reserve interest rate discussion last night, the meeting, understanding and breaking down the price action. It's now to then look at the forecast of where this may end up going and to try get ourselves in some good long-term swing trades that we can hold for days, weeks, potentially even months, right? That's the bigger goal outside of some of the scalping activities that happen on a daily basis. So we're going to be keeping an eye primarily this afternoon on US 100, US 30, gold. You guys know it's the most traded instruments at the moment across the board. And we're going to look for any sort of weaknesses that we can potentially exploit. The dollar data coming out in the next 12 minutes will certainly be the first key. If it's a straight win for the dollar, meaning numbers come in lower than expected, show that the dollar is doing a lot better, not as many people are filing for unemployment, etc., it's more than likely we're going to add some positions towards the downside on all of these trades. If it's the opposite, and I'm just repeating this probably the third time, just to make sure everybody's on the same page. If we receive higher than expected, meaning more people filing for unemployment, more people continuing jobless claims, that'll be bad for the dollar temporarily, and it might create some sort of support zone on most of these declining markets. And then we need to wait for the New York Stock Exchange to see, does Wall Street see this as a bit of weakness on the dollar to make back some of these losses or some of these downside moves that we've obviously seen over the past 12, 13 hours or so. That's the game plan for this afternoon. It's important that everybody understands, everybody's on the same page. We can see the heat map in terms of the last 12 hours across the board in the markets, where pretty much markets are just bled, right, from that interest rate announcement. And a lot of the names that will suffer are the big names, right? We've got Nvidia down almost 3%, Microsoft down almost 2.5%, Apple down 2%, Google almost 3%. So the big names will struggle because, again, investors are going to look at, where is my money safer? Is my money safer in big tech that's volatile, that's subject to all these issues? And remember, when interest rates are increased, right, consumers have less to spend. And what do they spend less on? These name brands. They spend less on these companies. They're spending more in the economy, spending less in the economy, and thus these stocks and their stimulus starts to decline. So very interesting time to be a trader. There's never been a better time to be a trader, and super excited to see where this ends up heading out. Now, I believe once we clear out this week into the history books, we'll have a very firm understanding of where markets are at and where markets are likely to go. And we have pretty much the only unknown factors this next interest rate announcement somewhere before the end of the year. And I think it's pretty clear we're going to get a hike between now and then. The dollar is going to come out with some strong data, Powell said, and we've seen it. The US economy has a ton of positive momentum. that is pretty much making it evident there's going to be a soft landing. The US will escape from this post COVID pandemic fairly unscathed. And I think it's a very interesting time to be a trader across the board as a whole. So guys, that's my 5 cents in my what's this thing called? It's a gown. In my very, very comfortable gown. I trust you guys understand where we're at. Data's coming out in the next 10 minutes. I will post on Premium Plus what the data is and what we're doing with some trades and opportunities based on that data. So stay tuned, stay part of Premium Plus. And guys, there's just so much exciting stuff. I just wish I could ramble on every single day. Our social community is going to be like nothing else you've ever seen in trading, right? If you've yearned for a place to share information, to get an understanding of what you're doing, to get insights of different trading activities, to get guidance, to get mentorship, to learn, to share, it's going to be unlike anything else that's out there in the world. I've never seen anything like it. And we're going to be the first to bring this and launch this. And it'll be part and parcel of DVD Markets and Premium Plus. And our copy trade is launching at the start of October. So the 1st of October, our copy trade will be fully functional. And the results are absolutely amazing. Mind-blowing. Risk management is key. We've handled it extremely well. And it's a project I'm very, very proud of and super excited to launch. So a lot happening. A lot is cooking. And yeah, that's my 2 cents. Otherwise, guys, much love across the board. You know the drill. Be safe, trade safe. And I will see you guys all a little bit later. Goodbye.